Hey, how's it going? Thank you for checking out my channel, Silver Fortune. So, the Bank of America is giving the advice to buy gold? Well, sort of. Michael Hartnett is an analyst for the Bank of America, the second largest bank in the United States, and he recently put out a report, an analysis of the current state of the markets and where he sees them heading in the future that completely goes against the mainstream consensus. Trust me, this prediction is worth listening to. And I love this because, like I said, this is a guy from Bank of America. It's not Peter Schiff, it's not the X-22 report, it's not Greg Hunter, or any of those guys. This guy is from one of the biggest banks in the world. And what he has to say about the markets and how one should invest in the future, I think is just spot on. It's what I've been saying on this channel, and many other voices in this community have been saying for some time now. He's not saying that there's going to be some small correction this summer, or that risk seems to be a bit high, or that stocks are getting a little overvalued. That's the kind of status quo predictions that we often see from these big bank analysts. No, what he's predicting is what he calls the Great Fall. And he says that this period will be characterized by manias, panics, and crashes. Okay, but first some background before this Great Fall. For some time now, Michael has been predicting what he calls the Icarus trade. And for those of you that haven't heard the old tale, Icarus was the guy that had feathers waxed onto his arm so that he could fly, but inevitably he got too confident and flew too close to the sun, which melted the wax, and of course Icarus quickly fell back to Earth as the feathers fell off of his arms. That is the same case for these markets. This Icarus trade, that some might call Trumpflation, has been in effect since the election, and according to his prediction, will top out sometime in the second half of this year, likely when a tax reform bill is introduced in Congress. Of course, as I've said on this channel for some time now, this tax reform likely will be much smaller than what markets have been counting on if a bill passes at all. And like Icarus, the stock markets will get overconfident before they inevitably plummet during this great fall. So where is the top to this market? Well, Michael predicts the S&P 500 will be at 2,500 and the 10-year U.S. Treasury bond yield will be at 3%. And then Hartnett predicts we will see a peak in both foolish confidence in the markets as well as earnings per share. Also coinciding with this top is central banks around the world tightening their monetary policy. And this is something we've already seen begin to some extent. We've seen the Federal Reserve, the European Central Bank, and other central banks begin more hawkish policy that's taken the form of maybe slowing down their quantitative easing program in the case of the ECB, or raising interest rates in the case of the Federal Reserve. And at this top, he predicts that there will then be a great fall. What caused this fall? What would be the spark? Well, he doesn't quite specify, but it could be a whole range of things that we've talked about. It could be the failure of some of Trump's policies, including his tax cuts. It could be a popping of China's housing bubble, which is massive right now. Or it could be a credit or liquidity crisis here in the United States. Maybe it would be a loss by Angela Merkel in the German elections that could cause this panic. Regardless, a crash will occur, according to Michael. And as many in the alternative financial media have predicted already, central banks will respond to this by basically throwing money at the problem, just like they did in 2008. They will respond with lower negative interest rates, massive amounts of quantitative easing. Maybe we'll even see purchase of stocks by the Federal Reserve or the ECB. Maybe we'll see helicopter money. Who knows what will happen? But keep in mind that the financial crisis that occurred almost 10 years ago now was in many ways unprecedented for its time. And central banks, including the Federal Reserve, responded with quantitative easing, which also was nearly unprecedented with the exception of the Bank of Japan. This next crisis is going to be even worse, and I think, as does this analyst think, that the Fed will respond with even more drastic measures. So that's why I say we could see them doing things like buying stocks or introducing helicopter money. And that's also why he thinks that during or after this great fall, it's going to be characterized by mania, panics, and crashes due to central banks and governments trying to figure out how to solve this problem, mostly through inflation, like I said, mostly through throwing money at the problem. Basically what he's saying, and I agree with him, that after this next crisis, we'll see massive inflation in an attempt to stabilize the economy. I mean, we saw it after the Great Recession. Sure, maybe we haven't seen inflation a ton in, say, food or consumer goods. Definitely we have seen it more than the government would like to admit, but we've seen it in other things. We've seen it in housing and healthcare. Look at how inflated the stock market is, or the upscale real estate market, or the commercial real estate, or some other financial assets. Inflation has occurred due to quantitative easing and some of these other policies. It's just not as noticeable for the average American. And keep in mind, during the Great Depression in the 1930s, we saw lots of deflation. So in many ways, the Fed's policy prevented deflation, which we've been taught is a dirty word, that inflation is good and deflation is bad. That's what the mainstream media or the federal banks would, or the central banks would like you to believe. But could you imagine if deflation hadn't occurred during the Great Depression? It would have been even more painful for many people that already lost their jobs or houses or farms, and now all of a sudden they're going to have to pay even more than they did before for food or for fuel or for whatever. Ideally, we'd have stable prices, which ironically is one of the Fed's mandates, though it now actually strives for at least 2% inflation, which is not price stability at all. That's inflation. But I digress. Hartnett finishes by saying that due to this new era in the markets, as well as central bank policy, we'll see real assets become much more valuable in relation to financial assets because they've been so undervalued for so long. And yes, this means precious metals. In fact, he says that over the long run, the best asset to own will be gold. That's right, Bank of America analyst is giving the advice of owning gold to survive this turmoil. Now, I don't know Michael Hartnett, and I know nothing about him. Maybe this is par for the course for him. I don't know. But I was amazed to read this, since so many analysts from large financial institutions tend to give very status quo type predictions that everything in the future will be rosy, much like central banks do. But I have to agree with what he's saying. This is what so many of us have been saying for so long, that real assets, especially precious metals, are the way to go, the way to protect yourself in this next crisis, especially once central banks ramp up their printing of money and market manipulation in this next crash. These actions that they'll take may prove to be the death blow to fiat currencies. Who knows? Maybe the dollar will survive, maybe not. But it will be a shadow of its former self, and each dollar will be significantly devalued. So, as always, I suggest you prepare and protect yourself for this coming turmoil, for this coming crash, by buying precious metals. And apparently, so does this analyst from Bank of America. But this article, I think, serves as proof of how serious this crash will be, as well as the ensuing chaos. Let me know what you think down below in the comments, and as always, thank you for watching.